Hello, good afternoon. It's afternoon or morning. It's exactly 12 o'clock. Okay, so good afternoon. It's Adil Fazal here, market analyst at CFDs.com. Be sure to visit CFDS.com for your trading needs. Certainly qualify for the potential bonus of 25%. And obviously, if your trading results are like mine last week, you probably do need that 25% bonus. I was down 160 points last week. Now this week is slightly better, plus 60 points for the day. But it certainly is a very tough trading environment. Okay, alternatively, you can visit my educational site, www.cfds.com, for your trading needs. Okay, let's try and decipher exactly what's happening here, and let's see what's caused this European market and US, obviously, equity futures to be crushed. Okay, so in terms of the actual market itself, it certainly seems to be the banking sector really that's certainly feeling the brunt of the pain. And certainly is causing this risk off or risk aversion. Not only is it the banking sector, as you can see, this is the DAX German banking sector. If I bring up the European banking sector, bear with me, FTSE 350 banks. You can see the banks. I mean, we have bounced for now, but certainly fighting here to potentially put in a potential bottom. You can see we've retested that pivot low. So it's all about double bottom now. If this double bottom on the banking sector can hold. Now, there is concerns with regards to Intense and Paulo, Deutsche Bank as well, if I can recollect. I mean, there was a tweet that I read not so long ago. Deutsche Bank is considered to be more risky by credit markets than Commerzbank, which had to be bailed out. So again, talks of bailing out, etc. And that's what's causing this euro to appreciate quite substantially to a large extent. Now, you can see on the daily chart of the Euro USD, we've broken higher. That resistance level at 1.122 certainly has held for now, which was a horizontal resistance zone, and we are looking to potentially come back. Now, if we do pull back here, then you are looking to test this obviously symmetrical wedge breakout. You do have the 200 MA that may well come into support, or potentially hold support, or your previous resistance equals support at the 1.1060 zone. So again, watch out for that zone on the Euro USD. But from my perspective and my understanding, we should certainly be looking to potentially retrace, especially after the jobs report. Now, if I just bring up the actual dollar, and the yen as well, obviously this is a yen chart. Your yen is into resistance, dollar is into support, and therefore you are looking for the markets to for the dollar to appreciate, and obviously that should help the euro to move lower, the yen to move lower, and that should obviously inflate equity markets as well. Now, let me just bring up the actual chart of the dollar. Bear with me. 1 second. Okie dokie, here we go. So, right, okay, so you can see here the dollar certainly has appreciated to a large extent. And we certainly seem to be putting in this inverted head and shoulders formation, which obviously flies against the Euro USD, or certainly confirms the Euro USD in the 60-minute, which has a HNS formation. So for if the euro goes low, which is expected to, if the euro were to go lower, then you are looking at the actual market. If the euro goes lower, then that certainly will help the equity markets go higher. So that's the interpretation there. Now, oil price certainly is in some basically a pickle, given the fact that we have had talks overnight or on the weekend with regards to Saudi Arabia and Venezuela and other OPEC members as well. I think we had, if I can go back and recollect, there was talk of a potential 50,000 barrels being cut. I think, or 500,000 barrels being cut. Going forward, let me just go back to that tweet if I can remember. Kuwait oil official sees 500,000 barrels of oil removed in 6 months. So certainly is talk in terms of trying to control the oil market and stem the flow of the oil market to a large extent. So that certainly needs to be taken into consideration. So the oil price, or the price of crude, certainly is looking at being into support at 29.5. If that fails, then you are going back to $27 or $28. Again, with the price of Brent, let's just show you the price of Brent as well, because this is all the factors that we could potentially obviously lay the blame on the risk off mode today. So you're looking at $32 for support, on the chart of Brent. So these are the areas of the zones that you are looking for support, and obviously that will cause the equity market certainly to potentially stabilize and the commodity markets to move higher as well. Okay, so China was certainly closed overnight. Nikkei was certainly finished positive overnight, so that certainly is a good, obviously a risk on a trade. In terms of the news flow this morning, Rand Gold earnings certainly better than expected. That helped the FTSE rally initially. French business sentiment, confidence, etc. certainly better. UK consumer spending almost at an 8-month high, so again that supports FTSE. In terms of obviously a risk aversion, we still have the tech shares under pressure from Friday. Obviously LinkedIn and Tableau software. I can't remember. I think that's what the company's called. And then obviously you have the investor sentiment confidence certainly coming in weaker for the Eurozone. So to a large extent, it's all about the Italian banks. Italian banks are tumbled. I think they've fallen almost 3.7% this morning. So again, banks. It's all about the banks. Okay, so ask yourself from a trading perspective, have they certainly been factored into the market? Now let's just bring up the European banks. See if I can bring up the European financial sector. Here we go, European financials. We did have an inverted head and shoulders, obviously that failed miserably. And the market is now testing the lows again. Let's just go to the weekly chart, see if we can potentially see any support here in this market at present. Let's have a look. Okay, so you have support in this region down here. Okay, you had support here, so we're certainly in a zone of support, but we are in no man's land, so certainly there's no limit to how much this could fall to a large extent. Now, again, I am relying on the Euro USD sell-off to actually stabilize these markets, and to a large extent, a lot of the bearish news certainly has been factored in from my perspective, but the banking sector still remains vulnerable, and there's certainly no telling in terms of a market that's gripped by fear how low it can or could go. Okay, now let's bring up the equities. Again, weekly chart of Eurostoxx, you are looking at potentially going into support. The daily chart is again into no man's zone now. Again, you have that pivot bottom low at 2790. Currently at 5815, looking to potentially put in a bottoming tail in the daily chart and reverse higher. That's my expectations at the moment. 60-minute chart, obviously we've broken that support. It certainly isn't a good sign. I was stopped out today on the Eurostoxx for minus 40. I was expecting that inverted head and shoulders to play out, and obviously it's failed miserably. But for now, that emotive move is over, and you are looking to potentially recapture that 2850, 2860 zone. That's what I am expecting. 10-minute chart of the Eurostoxx, certainly you are building a base here now. That's 2810 level, looking to potentially propel higher. If we propel higher, then you are looking at 2850, 2840 resistance, and then potentially retesting that zone there at 2870 where we broke out from. Okay. In terms of the S&P 350 is at a double bottom, so therefore it supports the European markets. Stock 600, again double bottom support, so therefore it supports European markets to certainly propel higher. That's the expectations at present. Let's just cross-reference that now with the actual Eurostoxx volatility index. Again, if you look at VStoxx, you are now coming into resistance on the weekly chart. On the daily chart, again, you're coming into potential resistance. The 60-minute chart, let's bring that up for you. So a 10-minute chart, again, you're looking at exhaustion and potential reversal. 60-minute chart, let's just go to a 60-minute, and again you are looking at a potential doji candle and a bearish engulfing candle. So again, indicating to us that the actual fear index now has certainly reached a peak and is looking to potentially move lower. Okay, so the volatility index for Eurostoxx certainly is coming into resistance. Let's bring up the chart of the French CAC now. French CAC itself, bring up a weekly chart, and you'll see that you are into potential support on the weekly chart now as well, certainly into oversold territory and looking to potentially bounce. The daily chart, again, is into double bottom support, and therefore expected to hold. 60-minute chart, again, double bottom support. We've certainly broken that key support zone at 4180, certainly looking very bearish at present, but the double bottom support certainly expected to hold and looking to potentially thrust higher. 10-minute chart, we're building a potential base here for, again, a potential breakout higher. So the chart of the CAC, if you cross-reference that with the volatility index, a CAC volatility index, we've closed a gap, and again, we are now potentially coming into resistance on the volatility index. The 60-minute chart certainly seems to be exhausted and looking for a potential top. So ever since we closed this gap here, it certainly seems to be, from my perspective, certainly into overbought territory in terms of the actual volatility index itself. There is a possibility, yes, that we can potentially go higher to 34, 35. But from my perspective, it certainly seems very unlikely, given the potential for a QE as a backdrop. Okay, again, bear in mind that you have the HNS formation in Euro USD, and therefore you are looking for a weaker euro, which in turn obviously will help European equities to a large extent. Okay, now let's bring up the chart of the CAC mid and small. Again, you have horizontal support, so you are into a key support zone for the CAC mid and small. If we bring up the chart of the mid 60, again you're into horizontal support, so therefore everything is supporting for a potential move higher. Okay, the FTSE 100 chart now, let's bring this up for you, where the pivot low was the 5760. We certainly seem to have fallen below there now. We are into uncharted territory. The next potential support now is that 5660. Again, given the stronger data from the UK this morning, UK consumer spending better, Rand Gold obviously better, Nikkei higher as well. Very unlikely to test those potential lows. Okay, 60-minute chart of the FTSE 100, you are into potential resistance equals support, so therefore you are looking for a potential thrust to move higher. 10-minute chart of the FTSE, you are building a potential base here now at this 5730, and therefore looking to potentially project higher. Okay, in terms of the German DAX now, given the fact that it's a leader in Europe, let's just bring up the German DAX for you. Locating the DAX. Okay, for some strange reason we don't seem to have the DAX. Okay, let's just try and locate from here then. There we go. Okay, so the German DAX. Now the German DAX is important. Why? Because we're into that 200 MA weekly support, and therefore you are looking for that to potentially hold and looking for a potential thrust higher. So that's my interpretation of the German DAX. You are into horizontal support in this zone here, and therefore again you are looking to potentially bounce higher on the German DAX. So you have horizontal support, you have 200 MA support. So again, two zones or two areas of where the market can potentially move higher. So very, very crucial, very, very important at this juncture. Okay, in terms of the German DAX to potentially rally. The daily chart of the German DAX, yes, we have broken below that key horizontal support at the 93330 level. Again, it's not exactly a positive sign. 60-minute chart, German DAX has this expanding or falling wedge pattern. Again, that's a bullish pattern. Okay, it generally indicates exhaustion on the downside, and you are looking to potentially short squeeze higher. So certainly be aware of those potential short squeezes, as they can occur at any time. So from my perspective, it certainly has potential lower channel support, and therefore you are looking for a move higher. 10-minute chart, you certainly seem to be building a base here now at the 9020 level, and again you are looking to potentially break higher. That's my interpretation of this price action, to retest that breakout level at the 9250 zone. So looking for a minimum of a 200-point move in the German DAX, which should be quite impressive. So all eyes on the German DAX, and obviously the euro as well. Euro debauchery, which will obviously send the German DAX higher as well. So that certainly is some food for thought. Okay, so in terms of where the market goes next. Okay, in terms of the price of oil, I've already shown you we are looking at potential support on the price of oil. In terms of the Nasdaq, again, this is a tricky situation. In terms of the Nasdaq itself, we did have support at the 4,000 level. Obviously, that's been breached, with the market currently trading at the 3940 zone. Okay, so if I go to the daily chart now, 3940, you are looking at potential support at 3990, and then the next level of support is in this zone here. Now, we did have gap fill support in this zone at 3870, so that certainly is a zone to watch. And if the market continues to fall and you are looking at testing that 3800 level, which really is quite shocking and quite scary, to be honest with you. in terms of where this market will go next. So again, certainly food for thought and cause for concern. Okay, in terms of the actual indices themselves, it certainly has been a sharp sell-off, to say the least. Okay, so that's the current price action and situation of the markets at present. Okay, so from my perspective, I was expecting the 4,000 level to potentially hold, and we certainly seem to be in no man's territory for now. Although the semicons and biotech certainly have solid support. In terms of the S&P 500, again the 1855 level that we're currently at the moment, again it's in no man's land. Okay, no real area of support. The only next support really then will be 1820. And can we really revisit 1820 with the strong jobs report on Friday? It looks very unlikely from my perspective. So certainly looking for a potential thrust to move higher. Okay, right. I think that's a market wrap of European indices. Trade safe. Adhere to your stops. This market certainly is in a very insane environment. Goodbye now.